Good morning. It's Wednesday, the 4th of December, and this is Govindraj Ethiraj, headquartered in broadcasting as well as streaming from Mumbai, India's financial capital. There is no take for today, but lots of conversations from real estate to artificial intelligence and how companies are applying them. It is interesting and important, so stay tuned. And here are also the top themes and stories. The markets now rise for the third session, stabilising upwards now. The rupee falls again as the Reserve Bank of India seemingly lets go a little bit. Is the premium end of the real estate market bottoming out? And what does that mean? How Wipro is training its top brass in artificial intelligence and using it for more organisational efficiencies. Air cargo volumes are up last month for the 15th month now. Stay high, but trade signals are weak given that Trump's trade tariffs might come. And finally, AT&T stock is being fancied for its boring fibre business. What does that mean for India?
This is the Core Report with Govindraj Ethiraj.
The stock markets are holding up. The benchmark equity indices, that's the BSE Sensex and the NSE Nifty 50, were rising for the third consecutive day and settled in the green once again. That's on Tuesday. The 30 stock Sensex was up about 597 points to close at 80,845, and the NSE Nifty 50 was up 181 points to close at 24,457. So the interesting thing is that the Nifty 50 is now around 7% below its all-time high levels hit in late September when the selling started, as opposed to the roughly 10% a few weeks ago being the bottom in some ways. The question, of course, is whether that was the bottom and whether the recovery from the correction has begun and to what extent. So remember that we are now in the first week of December when things slow down a little bit. And it does appear that FIIs or foreign institutional investors are not selling as aggressively now, or even perhaps buying more steadily, at least going by the bigger numbers or the macro numbers. Now, there is a sense that the government will nudge for some monetary policy action, translated lowered interest rates, and also boost capital expenditure, which has been slowing and we've all been talking about. On the other hand, the supply of domestic funds continues unabated, so there is enough supply pressure to send stocks up once again, assuming the selling slows down. The fear index, that's the India VIX, which measures volatility in the markets, is now down 2% at about 14.37. Amongst the broader markets, the Nifty Midcap100 and the Nifty Smallcap100 were also up on Tuesday, but about 0.9% each. The rupee down again. The rupee has hit a fresh all-time low on Tuesday, weighed down by a broadly stronger dollar and a fall in the offshore Chinese yuan to a one-year low. On the other hand, persistently strong dollar bids in the non-deliverable forwards market also exerted pressure, according to Reuters, and the rupee touched a low of about 84 rupees 75 paise before closing slightly and nearly flat on the day at about 84 rupees 68 paise. So it's all very close to 85 rupees as is being projected by several others now. The rupee has recovered slightly from that record low as dollar demand ebbed towards the close of Tuesday's session, and the yuan also trimmed losses, a trader told Reuters. While outflows have settled down, at least in contrast to October, there are still concerns on slowing economic growth and weakness in other Asian currencies like the Chinese yuan. So remember that India is not the only currency that's being hit right now. Lower growth rates could also trigger the Reserve Bank of India to lower interest rates, but whether that will happen is a little up in the air as the central bank is focused on, among other things, attacking inflation and within that food inflation through the current interest rate regime, which is of course high. How that works exactly is not clear to me and has never been clear, if I may say so. The larger point, as emerged from an Axis Bank report yesterday, was that the Reserve Bank of India could be intervening less in the markets and letting the rupee depreciate or transferring the risk, as that report said, to businesses and corporates rather than the Reserve Bank of India trying to maintain that very tight range of movement in the rupee. Whether that Axis Bank report preceded the action or followed it is not clear to me, but there seems to be some knowledge or prior knowledge of what was going on or going to happen. Analysts at ING Bank said in a note reported by Reuters that after many years of stability and enjoying carry trade inflows, it looks like the Reserve Bank of India has set the rupee free. So there you are. There seems to be some converging of thought and action linked to thought. The rupee's near-tenor volatility expectations have risen with the one-month implied volatility touching a near 6-month peak of 3% on Tuesday, said Reuters, which also added that the dollar index was last quoted slightly lower at 106.2 after rising on Monday, while Asian currencies were trading mixed. How Wipro is using AI. There has been much discussion about how companies are gearing up to use artificial intelligence in their operations. When it comes to IT services companies, now there are obviously two components. First, how their own engineers adapt to AI so they can better serve their clients or customers who could be sitting overseas or typically would be sitting overseas and who are looking to apply AI in their own business environments for better outcomes. And the second component, of course, is within these IT companies. Now, Wipro is a good example with some 240,000 employees with the twin challenges and objectives of applying artificial intelligence. I spoke with Sanjeev Jain, COO of IT Services Wipro, as part of a special series hosted alongside industry body NASSCOM. And I began by asking him, what are the learnings or the primary learnings from that internal rollout of AI in recent months?
First of all, when we announced last year, we announced with an intent and took a leap of faith. Now, in hindsight, a year and a half down, I'm very happy that we took that leap of faith. And let me give you where we are today. Out of the 240,000 employees that we have in Wipro globally, 230,000 have already completed what we call Gen AI 101. And what 101 does is creates an awareness to every employee on not only AI, but we believe that the responsible usage of AI is a very important component of AI. So we have all gone through it, including our senior management, including some of our board members. That is one. Second is, having done the 230,000 Gen AI 101, we started launching advanced learning pathways. It's natural curiosity for human being. Our employees started asking after 101, where is my 201, 301, 401? So we now had about 44,000 of our employees who are in advanced AI certified category. That has been a significant achievement for us. And as we went through it, you will understand, Govind, it's not one size fit all. You have to get into persona-based certifications. When I say persona-based, if you are in sales, if you are in a healthcare industry, if you are in a financial services. So we created almost 40 plus persona-based learning pathways so that we have folks on domain knowledge and the relevant AI infusion in that. To do this, how did we go about it, right? Step one, we created an AI academy, right? We need an AI academy internally to Wipro who actually could curate the content, launch these learning pathways, and then get these training cascaded to all our employees. It has been on an e-learning module. We also partnered with a lot of our hyperscaler partners. We have strong partnerships with Microsoft, Google, IBM, Amazon, NVIDIA. So we actually work as an ecosystem, leverage each other's learning modules, and that helped us bring it to life. In addition, what we have done, and this is all learning, okay, as we go around, we learn every time. So a lot of our employees also wanted to do much more deeper learning and certifications. So we have tied up with Indian Institute of Science, Bangalore. And that's a very unique program where actually we have an online master's in AI and data science. So that means Wipro employees will be assessed by IISc. There is no dilution of standards. They will go through the same aptitude, the same knowledge assessment that they would do for any other candidate they take. And then Wipro will enable a flexible work integrated learning program with IISc over a period of 2 to 3 years, where our employees will graduate. The undergraduates will enroll and graduate as masters. So I think to me, these are multiple things we have done. I would say we are still learning, Govind, what more to do.
So let me pick up on 2 or 3 points. So first is you said that responsible AI was one of your key thrusts of this whole program. The second you said is that you worked with both young people, young engineers, as well as very senior colleagues, as well as even board members. So how was the learning thrust towards them, as in were the same things being taught to all people, and how were they receiving some of these inputs or lessons?
Excellent question, Govind. So initially, I would say that the the Gen Z employees were able to finish faster. Some of people like me possibly needed some gamification, right, to understand a little bit more better. So I think we then started gamifying a bit. We started introducing quiz in between to increase our learning ability and started using some examples or use cases that actually brings things to life. I think that's the journey we went along. And now I think it is kind of a module which is well understood by a layman. And if they want advanced paths, they can choose to go deeper through our AI Academy programs that we have.
And I'm going to come to the specific programs as well. AI, it launched in some ways 2 years ago, and it's been in the way we are seeing it through ChatGPT and so on. Of course, AI existed much before that. The manifestation is what we're seeing. So this is also, I'm guessing, in some ways a moving target. So how does a program like this keep pace?
Yeah. So absolutely, it's a moving target. But let me tell you my own understanding or hypothesis of AI. It's not a new thing, as you also rightly said. To me, AI always existed. Our ancestors used, we did not call it AI, but they did our horoscopes. I'm sure, Govind, you would have your horoscope as well. So they did horoscope based on the solar system patterns. Okay. Then as we grew up, we used calculators, right? As I went into engineering, I started using scientific calculators. Okay. As I went to US, I started using GPS to navigate in the cars there. Okay. So I think the point I'm making is some sort of AI was always there. What has changed now is the availability of data and compute infrastructure. I think the data has multiplied, the compute infrastructure has become affordable. So we see mushrooming of these technologies. So this is an idea whose time has come.
I also asked Sanjeev Jain about what were the use cases for AI within Wipro and to walk us through how they were applying it within their own organization and within their own processes as well.
Now, coming to me, I come back to Wipro as a client zero because for us, that is in our control, right? So we have many live cases today. So for example, Govind, if I want my pay slip today, on the system, I have a chatbot. I just say pay slip for this month, it just mails it to me. If I want to process my leave, I have a chatbot who does it. Earlier, I would have had to go somewhere, log in, download, or send an email to someone. So there are many use cases where our expense processing, right? All the travel reports, expenses, all our lease processing, all our queries with HR, queries with IT, help desk, I think have actually gone live. We are actually seeing real benefits of these cases in production today. So it is real here and now. That's very important because people have to feel the power of AI going live. It's not just a theory anymore. And once they know, I think they are getting more advanced now into getting structured data and unstructured data together. For example, let me tell you, we have now embarked on a talent marketplace. Having such a large company, 240,000, you can imagine. We want to make sure we are, in my mind, Uberizing our talent marketplace. So what do I mean by Uberizing our talent marketplace? There are a set of jobs, demands that come, and there are our employees. So I have to marry both, right? So what we have done is we have asked each one of our employees to update their profiles. Once you update your profile, you can be matched to the next job that you want, and you can define your career aspiration. You could say that Govind is here today, Govind wants to be there tomorrow, and the AI engine will actually match based on your current profile and current skills, the desired skills. It will give you a learning path. And then you follow the learning path and you apply for that job. And then once you're selected, you can move. So these are, to me, examples people are seeing that it's helping them in their career aspirations. It's helping them drive them to a learning path, which they would have been blindsided. Even today, our kids ask after 10th what to do, after 12th what to do, after engineering what to do. So we're trying to fix that gap to actually help people define their career ambition and enable them through various programs that we have to meet their career aspirations.
Air cargo demand is up for the 15th month and now the Trump factor. The International Air Transport Association, IATA, has released data for the October 24 global air cargo markets, which shows that total demand measured in cargo ton kilometers or CTKs rose close to 10% or 9.8% specifically compared to October 23. And this was the 15th consecutive month of growth. Capacity was also up about 5.9 or 6% compared to October 23. And this was in turn driven by a 8.5% increase in international belly capacity, which refers to the storage within passenger aircraft. Dedicated freighter capacity increased by about 5.5%, which is the 7th consecutive month of growth with volumes nearing 2021 peak levels, says IATA. Now, while 2024 has turned out to be a good year for air cargo, 2025 is not looking very good. IATA's Director General Willie Walsh says that the incoming Trump administration's announced intention to impose significant tariffs on its top trading partners, including Canada, China, and Mexico has the potential to upend global supply chains and undermine consumer confidence. The air cargo industry's proven adaptability to rapidly evolving geopolitical and economic situations is likely to be tested as the Trump agenda unfolds, he says. So there you are. Air cargo is another area which I'm sure, along with shipping and a whole bunch of other logistics and supply chain industries and sectors, are wondering how things are going to shape up after January 2020 when Trump takes over. AT&T is back in the news. So the story that follows from the Wall Street Journal has an interesting poser for India and Indian telecom businesses as well. So if you take the example of Reliance, via its telecom brand Jio has invested heavily in media and entertainment assets from TV18 to Disney through acquisitions and joint ventures. But how much of that real value really lies in the hard assets underground in the form of its vast fibre, wireless and cable networks rather than overground through media and entertainment? I'm actually inclined to believe the greater value lies below rather than above, in a manner of speaking. Yes, I know wireless is in the air. And here's why I think so. The Wall Street Journal reports the shares of telecom giant AT&T have rebounded, including a 35% gain so far this year, since its CEO John Stankey reversed course and spun off its Time Warner Brothers unit and unloaded its satellite company DirecTV. That's spelled DIREC and TV. The future for AT&T now is powered by its wireless and broadband services as it works to wind down its legacy landline, says the Wall Street Journal. AT&T, which is based out of Dallas and the number 3 player in the chase for the US wireless customers, holds a commanding position in the battle for fiber optic broadband subscribers. The company said Tuesday that it expects to return more than $40 billion to shareholders over the next 3 years through stock buybacks and existing dividend payouts, and has also staked out an additional $10 billion over that span to give it flexibility to make acquisitions, pay down debt, and spend on other initiatives. All of these plans were out of the question in 2022 when Stankey slashed the annual dividend and sold the Warner Media unit to Discovery Communications, says the Wall Street Journal, and also points out that AT&T has spent the next 2 years cutting jobs and booking big write-downs, according to the Wall Street Journal again. The interesting bit is this: broadband companies are generally enjoying a Wall Street rebound as investors give the sector a fresh look, and falling interest rates are driving yield-hungry investors towards traditionally dependable telecom stocks backed by tens of millions of monthly cell phone bills, says the WSJ. Now, Stankey took over the telecom giant in 2020 and has worked to unwind many of the big acquisitions he had a hand in striking, including the $49 billion purchase of DirecTV, and the company eventually wrote down more than $20 billion of its pay TV business, which it has gradually sold off to other owners, says the WSJ. So now, will India follow suit at some point? I don't know, but this is something to think about, because from a sheer importance point of view, I would give more weightage to the network, including speed and reliability of it, rather than the content at this point, assuming, of course, the content is largely fungible and can come from anywhere. Intel sees a shakeup. Intel CEO Pat Gelsinger was forced out after the board lost confidence in his plans to turn around the iconic chip maker, which also added turmoil at a pioneer in that technology and chip industry, according to Bloomberg. The clash apparently came to head last week when Gelsinger met with the board about the company's progress on winning back market share and narrowing the gap with NVIDIA. He was given the option to retire or to be removed and chose to announce the end of his career at Intel, according to people who spoke to Bloomberg. Intel's CFO and Executive Vice President are now acting as interim CEOs, or rather co-CEOs. Gelsinger, who is 63, was once hailed as the savior of Intel. He actually took over 3 years ago, but had begun working at the company when he was a teenager, but left in 2019 to become CEO of VMware Inc. and then returned in 2021. Gelsinger also set out to take Intel beyond its traditional strength in personal computer and server processors by expanding into making chips for other companies, something it had not done before, which also put it in direct competition with TSMC, that's Taiwan Semiconductor, and Samsung. Also, as part of a revival strategy, says Bloomberg, Gelsinger laid out a costly plan to expand Intel's factory network, which included building a massive new complex in Ohio, for which it received federal aid from the CHIPS and Science Act, says Bloomberg. Is premium real estate in India bottoming out? A Reuters report and poll put out a few days ago, which we referred to yesterday as well, said that home prices in India, broadly referring to housing in major cities, was expected to rise about 7% this year. So the larger question was the sheer force of premium segment purchases in the housing segment that we've been seeing and reporting, including for super high-priced apartments in cities like Delhi, Mumbai and Bangalore, which are also selling out like hotcakes. But it does seem now that there could be some plateauing at the premium end, which of course does not bode very well for the entire real estate market. So let's understand where this is right now and what are these early signs. To understand that, I spoke with Ajay Sharma, Managing Director of Valuation Services at Colliers International, and I began by asking him how he was seeing the trends at the top right now, what was changing and why.
One of the key reasons why I gave that opinion on the Reuters poll as one of the contributors was that we actually are seeing flattening out of the demand universe for residential real estate, right? So this is primarily because the fact that the luxury sales that we're talking about are kind of flattening out across cities. Now, most of the articles that you see in the daily newspapers and online media pertain to what's happening the previous quarter. Even if you go by that, in Q3, everybody has said the sales have dropped by over 11% across in India, okay, on a quarter-on-quarter basis. So which means that there is some kind of stabilization happening on the demand side. The most important factor is that in the last 2 years, what actually drove the price growth and the volumes has been largely the luxury real estate and the premium real estate across cities. So it's very clear from any residential sentiment index reports that you take from any of the research agencies that you will see that's been the case. I mean, even in terms of pure supply, the new launches that have happened in the last 24 months also, the premium and the luxury segments have dominated across. Classic example, Delhi, NCR, Mumbai, metropolitan region, Bangalore. You're basically seeing that this segment has actually dominated the sales and launches. The only outlier being that probably is, say, a Kolkata or a Ahmedabad, where they don't historically have such a massive premium projects. And therefore, the overall ticket size has been more rational when you compare it with these other larger cities. So that's the only thing. One of the most important aspects that many people forgetting is that the segment that was buying into the luxury and the premium housing, there will be a point where they have maxed out their consumption. And that maxing out of consumption is happening. And when that happens, you will be left with a lot of residential volume, which will be in the segment where everybody was riding on for the last 2 years. And that will become a problem. So this is kind of happening as a cycle. Honestly, if you see, pre-2019 also, if you see, in the early 2010s, right, from 2010 to 2014, you would have seen a massive rise in the luxury and the premium segments, and then subsequently affordable kind of, became the buzzword in the residential segment. The VIX segment took over. And then, it continued at a point where residential sales were absolutely flat in 2018 and 2019. That people were discussing, okay, it's much better to probably do a commercial project or retail project or any other non-residential asset class per se. So that was how they were all perceiving. And then comes this entire pandemic and, its impact on the 18 months and subsequently, the pent-up demand flowing out. Honestly, as people who have been tracking this market, at least I felt that pent-up demand would only last for 12 months. But I also believe what has happened is because a lot of government incentives were in place, like, reduction of stamp duty, helping out with certain kind of concessions for the buyers, the whole home loan rate itself being low. All these things kind of contributed to the demand, and that pushed significantly the sales. And the people who took the most advantage of this were the people in the cream segment. Because, there was never going to be a better time where, people could save on stamp duty, people could save on a lot of concessions, etc. Right? So and the people who are like, sitting on the wall, like, who could push themselves to afford a higher cost unit, but were not doing it because of the economics. Now, because of these concessions, we're seeing that, it was much easier to be on the other end of the spectrum. And they started buying into that spectrum. So that's why premium and luxury performed very well. Since the beginning of 2022 to today, you've actually seen the home loan rates going up, which means that price to EMI ratio is actually up. So all those things are going up, which means that a certain segment will anyway fall off the demand curve, which was the people who were sitting on the wall, right? So those people who were looking at a 1.5 CR kind of houses who are now pushing themselves to buy a 2.5 CR kind of houses. Now, that entire segment will fall back into their original price bracket. You have that demand segment anyway coming out. So you have a reduction in the demand volume already happening. And the people who were actually buying into this 5, 6, 10 crores kind of apartments, they have maxed out their consumption anyway. Because ultimately, investment, it is all about making money, right? Today you buy it, then you flip it, and then you make money. Whether it is, a person who's earning 10 lakhs per annum or a person who's making 100 crores per annum, doesn't matter. Everybody wants to grow their capital. So it would be a fallacy to think that people who have bought all these units are going to just sit on the units because they have an attachment to it. No, they have bought it because it's an economic investment. They have to flip it at some point of time. So once that flip starts happening, what will happen is you will see a floodgates of the secondary market opening up in the luxury segment. And obviously, because people have bought it at a certain price, they're okay with certain margins, they'll just offload it. And then we are seeing the new launches which are coming in with a very high price rises. Like classic example, Delhi NCR, 32% year-on-year increase in terms of pricing. It's been crazy. For first time, I think in Delhi NCR history, we are seeing units selling above 100 crores in super luxury segment. So these are the kind of things which are, an indicator to where the overall trend is moving. And that's why we believe that, that the thing is bottoming out.
Right. Thank you so much for joining me.
Thank you. Thanks.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.